Welcome back to the channel, everyone. Thank you for tuning in today. Let's go ahead and jump right into the video because I want to explain this topic as a little bit or a little time as possible. Okay, we're talking about trading imbalances, what they are. You hear me in lots of videos talk about gaps, voids, imbalances. Some people even call them fair value gaps. Back to key areas of supply and demand. Now, imbalances or fair value gaps, they can also lie within the move themselves. But as a supply and demand style trader, I like to take my entries when the market gets back to the key or the origination point from where the move happened. Typically, that's coming out of a swing, whether it's aggressive selling, which is supply, or aggressive buying. I'm putting that out there. That's demand. Okay, so we're talking about supply and demand in reference to and using, encompassing, and trading imbalances into the strategy I use. Now, I'm not going into detail about the strategy. I just want to show you examples of imbalances, gaps. Some people call them fair value gaps, or voids back to these areas of supply and demand. So wherever we see aggressive selling coming out of a swing or aggressive buying coming out of an area, look, and there is basically a string line shot straight to the downside. So for example, right here, let's take an example. This is aggressive selling to the downside right here, okay? This also here is aggressive selling to the downside. So these are the reasons why we have these areas that we mark back with these rectangles as supply or demand zones, just like right here. This right here, this was a push up, a pullback, and aggressive buying to the upside. This aggressive buying here, this is an area of demand, okay? Equate those in your mind. Always remember, aggressive buying, demand, aggressive selling, supply. But when it comes to trading imbalances, I'm going to show you what I'm talking about, what I'm referencing to. Now, what are trading imbalances, fair value gaps? They're simply inefficiencies within the market, okay? Possibly where, well, definitely where the market is selling off in one direction, all right? And there's not really much buying activity that takes place within all that selling to the downside. Or where there's lots of buying opportunity, aggressive buying to the upside, and there's not much selling activity going on, leaving an area of inefficiencies, okay? Now, you have to understand one thing for sure. The market has to balance itself out, and I talk about that time and time again. It has to correct itself, especially where there are inefficiencies within the market to where there was an aggressive buying or selling activity that took place. Now, we break, say for example, okay? Like right here, we're moving to the upside. The market turns around here and we break structure to the downside. We have aggressive selling to the downside. Where did the origination point of the selling take place? Right up here. This activity of selling, okay, aided in the break of this area of structure below here. But what took place on that move was within an aggressive area of selling was definitely a lot less buying, possibly none at all, unless you kind of, the way you kind of figure that out and take a look at it is if you pull up like some means of a volume profile to it where you can look at the variations of selling versus buying in this particular area right here, because there's an imbalance right here I'm going to show you right now as the market moved to the downside as it was breaking structure right here. That's how you can pretty much determine how much selling was taking place, how much buying was taking place. So that's what it is. It's the inefficiency of within an area where there's a lot more selling going on. When we're talking about supply areas and looking for, and we see a lot of selling activity going on, a lot more selling than buying activity going on. So the market has to balance itself out, meaning that when we saw all this, when you see all this aggressive selling right here, at some point the market is going to run back to this area to equal the market out, balance it out, okay? And when it gets back to this area right here, you always hear me talk about where there's aggressive selling, like in this area, the general area right here. Those basically a lot of orders were put on to push the market lower, okay? And a lot of times, a lot of the orders may not have gotten filled. So when the market gets back to this key area, we can look for something to happen. We can look for some rejection to happen because we know that if the market price was moving in a certain direction to the downside quick enough and orders were trying to be filled and they didn't possibly get filled quick enough, when the market gets back to this key area, we can look for rejection to happen. Not on the higher time frame. I'm just using the higher time frame as a reference. But again, you will see activity like this, whether it's aggressive buying or selling, whether it's inefficiencies or imbalances lie, no matter the chart, okay? It can be a lower time frame chart, higher time frame, or higher base chart, lower base chart. It could be on tick charts, volume charts. You'll see it, say, for example, here on a 60 range. You'll see it on a 12 range, a 24 range, a 4 range chart. It really all boils down to what chart styles or types you're actually using when you're trading, okay? But you're going to see them across multiple charts, all right? Chart and activity, again, within the market, okay? So again, this is an aggressive area of selling right here. Now you may be asking yourself the question, where does the imbalance lie at? Always remember, imbalances are inefficiency areas within the market, and the market has to correct themselves in time. It doesn't have to happen immediately, but it will correct itself as it moves back to that area, okay, to fill in those imbalances, okay? So there has to be buying activity to equal out all the selling that took place right here, all right? So take a look right here. I'm just going to show you this right here. I'm going to move these lines out the way, okay, just to kind of show you. And I believe I briefly covered this in yesterday's video about imbalances, or maybe it was yesterday or the day before. I'm not sure which day it was. But using the arrows, okay, imbalance is going to be, a lot of times you'll see where we have this candle here, which we included in the supply area right here. All right, so the last bullish candle to the upside, the bottom end of it to the top end of that last bearish candle, we got to include that as the supply area. That's how I draw my supply zones. Now, the imbalance is going to rest back at the supply area, okay? But if you look right here, the imbalance of where within the supply area, because we do have the start or the origination of where the first imbalance lies at, back at the area of supply. So it's going to be right here, down to this last, to the top end of the third candle, to the bottom end of this bearish candle, to the top end of this third candle right here. There's the imbalance resting right here. When we see things like that, you can assume that when the market gets there, all right, it's got to fill this area in, that there's orders left on the table where there was all this aggressive selling that took place here, that a lot of orders probably didn't get fulfilled. So when the market gets back there, you have to think, logically speaking, that the market is going to try to react and fill the rest of those orders, and the market may push lower. How low, we just don't know until it gets back up there. As we can see here, the market reacted at this area, and it came down to this area of support right here. That's because the market started breaking back higher and taking out minor areas of structure back to the upside here. So you have to understand, I always talk about when the market is moving, retracing back to a zone where there's an imbalance at, a gap at, that it can react, but you've got to pay attention what's below you in this sense here. If we were taking a trade from the bottom end, like say for instance demand down here, then we have to understand what sits above us when the market gets back to this zone, which it has not gotten back to this key area or zone yet. There are imbalances resting right here. There's an imbalance resting right back at the demand zone right here. So I'm trying to draw the picture here, because people get confused from time to time again about, again, imbalances, about fair value gaps, or when you may hear voids. Again, all this is inefficiencies within the market, to where the market was moving quick enough in one direction, and there was more activity, in this case here, selling that was taking place more than any type of buying activity, okay? And there's orders on the table when the market gets back here, especially this imbalance is resting right there. That's where I talk about when you hear me say, oh, this is an untested or tested zone. If it is tested and we filled already any means of imbalance back to the zone before it really starts breaking to the downside at the, say for instance, at the start or the origination point here. So let's say that the market did this right here. I just want to show you right quick. Okay, I need to wrap this up too, because I don't want to make it too long. Where the market pushed down lower right here, right? So it pushed down, and then it immediately came back to this area right here. It quickly fills in any area of imbalance, okay? Void or gap back to the zone right here. So at that point then, yeah, we could look to possibly go short, because we do have some aggressive selling right here. But if it immediately taps right back into it, and then it goes down, and then it comes back to this zone here, that zone is already tested. I don't want to. So basically what it does is come back up here. Maybe you took a short here. It pushes lower. We get some additional aggressive selling that takes place here, and then it comes back to the zone. Am I going to be interested in going short again? No, because to me, I do not like to take trades back at a tested zone where the gap, the imbalance, the inefficiency was corrected, where the market balanced itself back out, okay? I don't want to do that, because I'm more likely there's nothing on the table for the market to, orders for it to really fill, okay? So let's do away with these lines right quick. Just want to show you another quick example. Again, I'm using a higher time frame, but again, you can find things like this, activity like this. I believe in an example yesterday. When you are taking a trade, say for example, And let's say, for instance, that the market there was aggressive selling right here to the downside. And this was a beautiful supply zone that the market came right back. For instance, aggressive selling right here. It broke structure right here. It comes back immediately to this area. It fills in and corrects the market, balances itself out where it fills all those where the inefficiencies were. Now we have a efficient, balanced out market. And then if the market was running to the upside here, say for instance, and there were inefficiencies in the market, where the market didn't correct or balance itself out, meaning that there were imbalances there, the market could reject this area and come down because it's broke structure right here below this area. It could come down and we could see a nice downward move to where it starts to fill in and correct itself by filling the imbalances back to the downside. You'll see things like that happen. That's why you see me from time to time. When I say time to time, a lot of times you see me, I'll be sizing up the market. I'll be looking at it and I say, okay, at a demand area, I'm looking to the left-hand side of my chart. I see where there's imbalances or inefficiencies in the market, where the market pushed down to the downside. I'm taking a trade off a demand area and I'm looking to fill in the gaps, voids, imbalances back to the upside. I talk about that. You hear me say that in multiple videos. The market reacted the way it did right there. Imbalance or inefficiency or gap or void back to this area of supply right here, okay? Same thing here, where we see what's taking place to the downside here. The market breaks structure to the downside. When it pulls back, we have a demand zone, a supply zone resting right here. Pushes down, starts to break structure to the downside, takes this area here out, push down, pull back, breaking structure, aggressive selling to the downside. Look what happens. There's imbalances as the market was pushing lower. Inefficiencies, more selling activity took place than there was any type of buying activity, forcing the market to flushing it hard to the downside. When the market pulls back to the zone, you can expect something to happen here. So the imbalance, gap, void, however you want to say it, back to the area of supply right here. We'll draw it right quick, like right here. Bottom end of this candle here, okay? And the third candle, so there's a small imbalance resting right here. Okay, gap or void back to that area there. The market comes back to this area here. It fills in the imbalance resting right there back to the supply zone. It reacts and it pushes lower. Again, this is a hard time frame. I'm just using it as an example to show you. And where does it come? It comes all the way back down here to the downside. Why? Because we have imbalances resting back to the downside. There's an imbalance from here to the bottom end of this third candle right here. There's an imbalance from this candle here back up to the bottom end of this candle right here. You can see imbalance here, imbalance here. So that is what we're talking about when I'm trying to explain trading imbalances within the market. You have to see them, and that's why supply and demand, when coupled with seeing those areas of gaps, voids, or trading imbalances back at a zone it's so powerful, because the market is going to correct itself, fill those areas in where those inefficiencies at, and once it does get back to that area, and there's orders resting on the table, more than likely when it gets there, they're going to get filled, and then the market's going to continue pushing in the same direction in which it was coming from. So it came from this direction here, pulls back, reacts here, moves lower. And the same thing here. You see the market pushed up here, pulls back, and it's breaking higher. When it gets back here, again, you got to pay attention to price action when it gets there. But once it gets back here, it's probably going to more likely reject, because we have fair value gaps. So we have imbalances. We have gaps back down to the area of demand. Understand that. So I wanted to cover that to give you just a clear example and show you a couple of areas and things what to look for back at the zones when we're talking about trading imbalances. So that's all I have for you in today's video here. I just want to push that out there because people are always asking me about trading imbalances, what they are. Is it the same as gaps? Is it the same as voids? Is it the same as fair value gaps? Yes, guys, it is, okay? Sometimes you're going to see multiple areas of imbalances resting all the way back to the zone, okay? But outside of that, look, if you're not a current subscriber, please take the time to go ahead and click on that sub button down below. Make sure that you turn on all your post notifications to never miss an upload here on the channel. Please, if you haven't already done so, tap the like button for me. Please drop a like on the video if you found value in today's content. I have many more videos on the channel covering great and valuable content just like this. This is how I trade. This is what I see. This is how I do it within my own personal trading on a daily. There's a certain strategy I use. I talk about that strategy within multiple videos. So spend some time, guys, watching the videos. Okay, I promise you that any answer that you may really have is you're going to find it within the videos if you watch the videos. If you're interested in joining the Discord, find the link down in the description portion of the video. Also, if you're interested in becoming an Elite Channel supporter or member, find the link to the to become an Elite Channel member or supporter right under the Discord link in the description portion of the video, or click on the join button right here you see next to the share or demand, not demand, but demand, right next to the share or download button, and you can join and become a Elite Channel member for $6.99 a month. Thank you for all those who are supporting the channel and who are Elite members. I really appreciate you supporting me as a content creator. But that is all I have for you. I'm wrapping up this video today. Take care and have a great rest of your weekend. Tomorrow's a holiday. Remember that. There's early halt, I believe, at 12 p.m. Central Time and 1 p.m. Eastern Time. Take care. I won't be doing any trading tomorrow. Not sure if I'll drop a video, but I'll look to see everyone back over in the Discord starting on Tuesday. Take care.